Today we're going to be looking at the bond market performance for the first half of 2026, and we're going to be considering somebody who was investing in 100,000 in every bond that was auctioned throughout the whole period. So as you can see on the table on your right, the 2-year bond was auctioned twice, bringing the maturity value to 200 and coming in at an average yield of 14.54%, bringing the bond value to 174,615.66 shillings. So those people who are not familiar with bonds, we are paying the bond value right now, and we shall get the maturity after the bond duration has ended. So if considering the 2-year bond, you are paying 174,000 shillings, 615 right now, but after the 2 years they will give you 200. So if you're paying something higher than the bond value, that means you're buying the bond at a premium, which means that you're either buying the bond after it has been auctioned or after it has or after a period after it had auctioned, it had paid a coupon. So moving on to the 3-year bond, the 3-year bond was auctioned 5 times through the first half of 2026, and it came in at an average yield of 13.88%, bringing the bond value to 439,105.38 shillings. So looking at the 5-year bond, it was auctioned 3 times, coming in at a yield of 15%, bringing the bond value to the 260,872.85 shillings. Moving on to the 10-year bond, it was auctioned 4 times, bringing in the maturity of 400 at an average yield of 15.59% and a bond value of 346,055.92 shillings. Moving on to the 15-year bond, it was auctioned 3 times, bringing in an average yield of 15.99%, bringing the bond value to 258,641.51 shillings. Moving on to the 20-year bond, it was also auctioned 4 times with an average yield of 16.43%, bringing the bond value to 343,576.56 shillings. Looking at the 25-year bond, it was auctioned once at an average yield at a yield of 16.29%, bringing in the bond value of 85,991.92 shillings. So I've went ahead and attached the coupons that these bonds will be paying after they have deducted withholding tax. So before we move on to the treasury bills, please, if you haven't subscribed, please subscribe, support the channel. You can go ahead and follow us on Facebook, X, and TikTok. So looking at the treasury bills, so we're also considering a person who was investing in 100,000 Ugandan shillings for every treasury bill auction that happened. As you can see, for the 91 days duration treasury bill, there were 10 auctions totaling to 1 million, giving a yield at cutoff of 2.49. That's the average yield, bringing the bill value to 975,102 shillings. Looking at the 182 days treasury bill, there were also 10 auctions, bringing the total to 1M, bringing a yield at cutoff of 5.32%, bringing the bid value to 946,798 shillings. Looking at the bill for 1 year, that is 364 days, there were also 10 auctions, and they were bringing in a yield at cutoff of 10.96%, bringing the bid value to 384 shillings. That was totaling to a bill value of 2,812,284 and a maturity bill value of 3M. So that was the performance from the treasury bill and the bond market. So here is the overall outlook of both the treasury bill and treasury bond market and the equities market. So you can go ahead and look. I'd already shared about the equity market. So if you didn't watch the video, please you can go back, watch the video and see how the equity market performed, looking at the price change, the dividends that were offered. Thank you for watching. Please subscribe. See you in the next video.